Welcome to Straight Grown Talk, everyone. This wonderful July 21st, 2019 day. I want to welcome newcomers that are just coming to Straight Grown Talk. And help them understand what this show is about. This show was created and designed to help people in the community understand what's going on in the community with valuable topics, in which such as what we're going to be talking about today. I also want to talk about an upcoming event that's going to happen here in Atlanta for October the 12th. It's called Level Up. As you can see, that's posted right now behind me. This conference is about wealth. So for 3 years, I talked about I'm Grown Now What. It was to help the young, educated young people that was transitioning from high school, that was taking their first steps into adulthood and financial literacy. As now, 3 years later, we should be well versed into what adulthood is about. So now it's time to level up your game. Again, I want to welcome everyone and thank everyone for joining me live on Straight Grown Talk. I want to take a moment to talk and say thank you to our sponsors. As you can see, all the ones that are rolling past behind me. So thank you very much, because without you, we couldn't exist. Today's topic is something dear to me, which is everyone needs to know. We never know what and when our expiration date or time will be. Today, we're going to talk about, let's talk about insurance. When we come back, we will have our special guests aboard. Stay tuned, listen, because this is a very deep conversation. I also wanted to make you guys aware. I want you to listen to the entire show, as I will be giving away another freebie. It is a gas card, so you have to listen and follow instructions. When we come back, we'll have our special guest, Ms. Tisha Austin, with Let's Talk Insurance. Thank you.
Hallelujah! Hallelujah! Oh, glory, glory, glory! Hallelujah! Because I'm on a path. I'm on a direction where I know that my direction right now with my vision is stable. It's stable. Oh, the lens and everything is clear. The 2020 vision is there because she exists, because I know.
You exist. We exist. I exist.
She exists. We all exist. Hello, my name is Janelle, CEO and founder of She Exists. We are coming to Raleigh, North Carolina on June 22nd. Please join us and experience some amazing speakers and enjoy our vendors. For more information, please visit our website, sheexists.org.
Welcome back, everyone. As you can see, I have my guests today for Let's Talk Insurance. I have Ms. Tisha and Chuck Austin, which is a husband and wife team. Yay! So I'm going to give them a moment to explain who they are and what they do.
Well, yes, we are a husband and wife team. We've been together a little over 21 years. We have 5 beautiful children together, 4 boys, 1 girl,
Okay.
2 grandchildren. But we got started in the business together about 7 years ago. I quit my job maybe about 5. He quit his job 2 years ago. So now we do insurance, financial, finances for, this is all we do.
Okay. And Chuck, tell me a little bit about you. What's your background?
Well, my background is computers. I've been a computer IT guy for over 26 years. But wanted to do something that was a little more beneficial and more helpful to the community.
Okay.
So that's when I decided to make a career change.
Okay. What inspired you guys to get into doing life insurance?
Well, that's funny you should ask. We didn't take it seriously. We've been looking for something, but we never thought we would be life insurance agents.
Mm-hmm.
So we didn't take it seriously until we had a couple of life experiences. My sister passed away, and I saw how things got turned upside down. And then 3 months later, my grandmother passed away. and it was really difficult in both instances. And so when this opportunity came to me, I first just wanted to make sure that my family was straight, and that his family was straight, and then our friends were straight, and then it just kind of became a crusade to make sure that everybody is straight, because everyone needs this. Like you said, everyone needs to know, they need to be educated, and they need to understand why, especially in our community, why life insurance especially is so important.
Okay. So I'm going to jump right in. Is it a good idea to only have life insurance through your employer?
Well, no, it's not a good idea to have it through your employer. Of course, accept it.
Not only.
Not only through your employer, accept it. One thing, it's either free or it's cheap. So free is always good. But the reasons why you want to have it outside of your employer is for a few reasons. One of the reasons is because it's an employer-owned policy, they pretty much control it. So in other words, if you happen to leave the job, or if the job decides to let you go, you no longer have benefits. Now let's say, for example, you stayed at the job for about 10 years. Now you're 10 years older, so insurance is going to be more. Also, your health may have changed where you cannot get insurance. Another reason why you don't want it through or just through your job is because, let me ask you this. When's the last time you heard jobs were getting better on their benefits and everybody was jumping up for joy because their benefits are
That's
improving?
been a long time. I promise you, no job these days asks those fact-finding questions.
No. So what happens is normally because they're paying the bulk of it, normally they're trying to find ways of cutting expenses. And the way they cut expenses is, one, cut costs are in the insurance. So a lot of times you may have good insurance at one point, but then when they cut it, now your insurance is not that good. So those are many different reasons.
Another good reason is, especially for moms that have children, if you ever go on FMLA and you're no longer an active employee, your insurance is not valid.
Yeah, that so-called thing called COBRA kicks in, and it's really double the amount you normally would pay with your employer. And I promise you, a lot of families can't afford the COBRA payment,
Absolutely.
even if they were laid off or that assumption. When would you say is the best time to get life insurance?
Now, no. The best time to get life insurance is when you're young and healthy.
Okay. And that is age when?
Age today. You're never going to be younger and healthier than you are today, right?
Absolutely. Or if you're a new family, or you have responsibilities, or you just don't want, even if you're single and you don't want to leave your parents with that debt, of having to take care of, not even debt, but the responsibilities or that burden of having to take care of you, your final wishes with, laying you down to rest. That's just, when you're grieving, it's just hard to trying to come up with money and having to grieve at the same time is really a struggle.
And many families can't afford to put their loved ones in the grave. I know I see a lot of GoFundMe accounts, and it actually burns me up that I see that you had an opportunity while the person was living to get more coverage or to even get life insurance, but you wait till they die and pass, and then once you get through that, instead of you saying, oh, I don't want to go through this experience again, oftentimes we do it again and don't get coverage. So it comes back to what is important to you. When is it enough? Because you never know if someone in your family have to die, and let's say, God forbid, you have to take care of their children. Do you have the funds and the money to be able to take care of their children? Do you have the funds set aside to be able to, with your own kids, if you passed away and had to go stay with the non-custodial parent, or let's say the custodial parent, would they have enough money to support your children? A lot of times people don't have that kind of money laying around. So
that's true. So sometimes these children even have to get divided.
Yes.
I have 4 children living at home. Heavens, God forbid something happened to both of us together. One person taking on 4 children is a lot.
Yes.
So now you risk having those children separated, which is it happens. It's a real thing, especially when life insurance is not in place.
Yes. So let's go over the different types of life insurance.
Okay, there's 2 major types of insurance that you can purchase. One called whole life. It also goes by many different names: cash value life insurance, universal life insurance, variable life insurance. And then on the other side, you have what's called term, which is just straight insurance.
Okay, so let's put up the whole life and life insurance difference so the audience can see and they can listen as we're explaining what the difference is. Okay.
All right, so whole life is cash value life insurance, as I said before. It does have a death benefit. It also has a savings feature that's attached to it. So pretty much the way it works is every month as you pay your premium, some of that money goes into what's called a savings account. And they'll tell you things that you can take money out of the savings account. But what they don't tell you is typically they're telling you that you're borrowing the money. So these are the problems with the policy, is that you have to borrow your own money. So now you're putting money into an account and they want you to take it out, and typically you borrow it out at about 8%, anywhere from 6 to 8%. Now another feature that's also not good about the policy is the fact that there's no savings. So just think about this. For the first 2 years minimum, I've seen it longer. Actually, I've seen it up to 9 years. But think about it this way. You're putting money into an account for the first 2 years minimum, and there's no money into it. So my question always is that a good or bad thing? You know, if you had a banking account and you stuck $100 in that account for the first 2 years, after 2 years you want to withdraw money and the teller tells you, I'm sorry, but you have no money in here, we're going to have a problem because I should at least have $2,400 in there. And the major problem with the policy is at the end when you pass away, your family now has a death benefit, and there's also money in a savings account that your family does not get. So the money in the cash value actually goes back to the company. So again, is that a good or bad thing? It depends upon you and how you want to look at it. You know, if I had a savings account at a bank again, and there was a balance in there, and I passed away, I would like my family to get what was in my bank account. I mean, wouldn't you?
Yes, yes, yes. My next question is, what are the roles of life insurance in the policy?
Well, you have what's called, you have the insured, you have the owner, and then you have beneficiaries. Okay. The insured is not always the owner, because if I wanted to put insurance on my mom, she would be the insured, but I would be the owner, the person paying for it. Okay. So you have to have a vested interest in that person. So life insurance, you have vested interest in parents, you have vested, of course, in your children, but not brother, sister. You know, I can't put insurance on my sister, I can't put insurance on my neighbor, but the way we do the insurance is we put insurance on the family itself. So it's not just mom and then another one on dad and then another one on Tommy, little Becky, and Susie, but we actually bundle them together so that the parents pay a lesser premium because they're bundled together.
That's great.
As
That's
one
great.
policy.
That's
One
great.
policy per family.
That's great. So at the end, if let's say we were a family, and let's say I leave, how would those benefits be paid out accordingly?
Are you saying if you left your husband or
No,
if you died?
If I died.
If you died, okay. So Chuck, explain to them about the way our family policies work. If the primary insured died, and what would happen with the children's policies?
Yes, please explain to our audience.
Okay, well, the way our policies work is if, God forbid, the primary passes away, we're going to use the husband. We seem to always kill off the husband. But what we're going to do is the husband passes away. The wife, of course, is the beneficiary. She will receive the death benefit. Now, what our company actually does is we will actually pay up the children's policy until they turn 25. We will take care of the kids because that's just one less thing you have to worry about.
Okay. Sounds wonderful. Sounds wonderful. So upon us purchasing a life insurance policy, when does it go into effect?
That's a good question. So we collect your first premium up front.
Okay.
The reason why we collect that first premium up front is because it's like a good faith deposit. So because you have a deposit down while your application is going through underwriting, you're conditionally covered as soon as you turn the money in that day. So even if let's heavens forbid you were to fall asleep in death that night, the company will pay you or your beneficiary money because you were conditionally covered, as long as you didn't lie on the application, of course.
Okay.
So while you're going through underwriting, you're still covered. There's no period of a year or two that you have to wait to receive those benefits. at least not through us, because I have heard of some companies where you had to wait a year or two, you know, and if you died within that year or two, they might just pay back all of your premiums. But no, we're actually cutting you a check for whatever amount that you selected for your death benefit.
Okay, so I heard you said an application process. Can you tell us a little bit about, I know you can't go into real good details, but can you tell us what is normally basically on an application?
Well, of course, it's all of your information. So we have two types of how we collect information. One is through blood and urine, which is a custom advantage. The other one is through, is called our MIB, which is our Medical Insurance Bureau, something like that. But they'll pull your records from your driver's license number. So whatever type of medication you're on, if you had any hospital stays that was over 24 hours, they would pull all of that. So it just depends on how much coverage you get and what you qualify for will determine which way we would have to do, whether it will be the blood and urine or whether we can just instantly give you what's called a term now, which they'll just go ahead and issue you a policy once they do the review of your medical background.
Are there any limit caps? When I say limit caps, I heard you say we can do one with your blood and urine, the other one with just your information. What is the difference between the two of those? Meaning, are they caps with you giving me blood and urine, or is it caps with me just giving you my basic information?
There are caps, but it also depends on your age and your health. So as long as your health is good and you're a young person, the cap, I believe, is 300,000. So anything over 300,000, you would have to do blood and urine. But but it depends on the age. So if you were, 40 and below or 39 and below, it's 300,000 is the cap. But if you wanted 300 or more, then you would have to do the blood and urine.
Okay. What are the other obstacles that I might have? Because I hear you said if you're healthy. So let's say hypothetically a person had heart issues. Will they be able to get insurance coverage?
Well, the person that has heart issues, no, they have heart issues. And so even if it runs in your family, go ahead and get a life insurance now before you even get diagnosed, because you risked not even getting insurance or even being rated. So if you're rated, then you're paying more, than an average healthy person would pay.
Wow.
So like I said, if you know if heart disease runs in your family or diabetes or any type of health conditions, like even when we tell our clients, as soon as your child is born, put them on your policy, because that'll cover them through 26. Now they're guaranteed a policy, for the life of that child. So the best time and always the best time to get life insurance is when you're healthy.
We've had a client where she was healthy and qualified for insurance, but decided to wait, and unfortunately, she developed breast cancer.
Oh, wow.
At that point, she's uninsurable. So there's really nothing I can do for her. But she came to me, I'm ready to get insurance. Well, at this point, it's too late. So that's why we tell people, get it when you're healthy. So many people feel they're invincible. I'm not going to die. Well, what makes you different from anyone else? Or I hear this all the time. I'm not expecting to die. So what you're telling me is everyone that died today expected to die today? That doesn't make sense. No one expects, no one knows. There's only one guarantee. We buy insurance on our cars, we buy insurance on our phones, we buy insurance on our houses, but there's no guarantee we're ever going to use those insurance policies.
Correct.
But there's one thing that's guaranteed: you're going to pass away. We just don't know when.
That's true. Let me ask you another question. In regards to investments, a lot of people want to know about how is the life insurance can be an investment in your life.
Okay, well, that's one of the small unfortunate misconceptions, that your life insurance policy is an investment. So a lot of people, just like the whole life policy that we mentioned before, believe that they need a savings or investment portion of their life insurance. Again, my question is, do you have a savings account in your car insurance? No. Do you have a savings account in your homeowner's insurance? No. Then what makes you feel there needs to be a savings vehicle in your life insurance? Life insurance is for one purpose. It's for when a person passes away. That person is leaving behind money for their family.
Correct.
And that's what it's for. It's two things pass away when you do. You and your ability to bring in an income. And what life insurance is, it's a replacement of that income because we can't bring that person back. The reason why I have life insurance, like Tisha says, we have four kids at home, and we just recently purchased a house. God forbid I don't make it home, I need to make sure money is left behind for her and my children. Now, if you want to have investments, then you want to have investments outside of your life insurance. Because again, when you bundle it in, you lose the benefits when you die. You also have to borrow your own money. So let me ask you this. If you have to borrow something, is it really yours?
No.
No. So you're putting money into an account that's really not yours. It has a historic low rate of return.
Okay.
When outside of your life insurance, if you get a proper investment, you'll get a better rate of return. So your money's going to work better for you.
And if you can show that illustration with the toaster, the slide, I want to elaborate on that because I think that it puts perspective. It gives a lot of perspective.
Can we have the slide with the toaster come up?
Okay. So this is talking about a toaster. It's just an illustration about a toaster. On the 1st and the 15th, you go down to your kitchen and bing, $2,000 pops out of it. Would you like that toaster? Because you're getting $4,000 every single month from this toaster. So would you insure this toaster? Well, of course, if it's guaranteeing me money for me to get $2,000 on the 1st and 15th, of course I'll insure it. Well, unfortunately, there's no such toaster, but you are the money machine for your family. So wouldn't it make sense to insure? So if it makes sense to insure an imaginary toaster, would it make sense to insure your own income? So that's all we're talking about is if you would insure something that's imaginary because you love it and you like it, wouldn't you insure yourself because you're the same thing to your family? They're expecting that paycheck day in and day out. And just to continue through that illustration of the toaster, can you bring up the family? The mom and the dad?
I don't think that was on there. That was the one that was.
Oh, it was messing up. Okay. So life insurance is for the living, of course, but I like to call life insurance your last love letter because that's all it really is the last thing that you left that your family will always remember.
That's a good thing. And it's always a good thing to be able to come back and know that if you pass away, or at least you have a good conscience to know that upon your passing, someone can assist with being able to afford your loved ones. Just like I stated a little bit earlier, people die every day, and I'm quick to see on social media all day long about GoFundMe accounts when you could have stopped it from the very beginning with just investing. And one thing I do want to ask a question of, how expensive is life insurance? Because I personally feel that if I can go out and buy a nice dinner, and the average dinner is costing about $50 plus, then why can't I afford life insurance? It doesn't cost that much.
Not at all.
Honestly, how much do you love yourself? How much do you love your loved ones, your kids? How much do you invest in you? I look at it as an investment now for my future, for even if I have kids. If you're getting ready to get married, that's something that you and your spouse need to sit down and talk about. If you're having kids, insure them as well, because Lord forbid if they pass away, you still got to pay for them too. And unfortunately, I know a lot of people don't want to cremate, but if you can't afford to bury them, you got to do something with them. You can't just let them just stay here, because the funeral home definitely is going to do something with them, regardless if you're prepared to or not. They can put you in a little pine box and put you on the ground, and it'll be unmarked, and you have no connection with that person whatsoever. Or they can declare you indigent. The state will give you $250 in Georgia, and again, you're back at the same spot because your loved ones will still be uninsured. So the next person that's coming behind, you didn't take care of them while you were living. So now you have go through probate court, and that's a whole nother issue with having to go through them and even talk about this. So get your life in order. Make sure you have insurance. Go get a will. Put what you want in your will. Make sure your beneficiaries are listed. And please, I do also want to talk about updating once you got insurance.
Very important.
I was married divorced some years ago, got remarried, and forgot to take my ex off my insurance policy until recently. I was reminded that I had not done that. So I didn't even update it from when my mother had passed away. So I didn't exclude her from mine as well, which I'm glad I have done now, thanks to you too. So yes, I am very, very excited about that. But please explain about updating as well.
I would look at it every time there's a life event, you know, especially if you're a social media person and you have these life events, that's the time to add or delete or whatever you need to do. But if nothing happens, then just look at it every 5 years and see if you have the right amounts. Because, you know, when we're younger, we might only want a certain amount. But now that we're getting older, we have more responsibilities or more material things that we need to take care of, or more children, maybe you need to up it. That's another thing that's very important.
We always call our clients to check on them. Have you had another child? You know, because one, we need to add that child.
Right.
And of course, you may need to up it because now there's more hands in the cookie jar.
Right.
Buying a house, you know, it's something else that you may want to up your life insurance on because you want to make sure that gets taken care of.
What about your business?
Absolutely.
Too.
All that needs to get taken care of. And to also touch on something that you said before about the cost. You know, one of the things that we do when we sit down with people is really let's put things in perspective. Let's take apples to apples. So a lot of times what I'll ask a client is, you know, well, if you was to sell your car today, how much would that car be worth? And they typically tell me it's somewhere between 10,000, you know, 15,000. You know, rarely do they say over 20,000 unless it's a luxury car. And then I always ask them, how much a month do you spend on that? And a lot of times it's in the 200s. You know, you're spending $200 a month on a car that's worth $10,000-$15,000, but you want a nickel and dime when we're talking about your life.
Yes.
And it's nowhere near that.
And unfortunately, we do not take the value of our life as serious as we take materialistic things such as your home, your cars. Even investing, more people take more seriousness in investing and 401ks and stuff like that, but they never value their own life. And I don't understand why people don't put the same amount of time and energy you put into your work, you put into your children, you put into owning your business, being self-employed, you put into finding things that you want that are materialistic, that when you close your eyes will truly have no value to you or your family. Because unfortunately, if you have a house or a business, if the person you've left it to have no sense of direction of how to handle it for your business or your house, you're going to lose both of those automatically.
All of it.
And unfortunately, we don't take the time to sit down and explain. So that's why I put this together for the community to realize and help us understand things that we need to be put in place prior to it happening. But again, we need to value our lives the same exact way.
Yes,
we need to make sure that we're covered. We need to make sure that you're covered. You're covered.
Absolutely.
You guys are covered. We need to make sure everyone is covered, because unfortunately, when you close your eyes, that's the wrong time to be hollering about insurance. Now,
Don't wake
the
up
right
dead
time.
and not insured. Don't wake up dead and not insured.
Right.
I have people come into my office all the time and say, well, let's not talk about the insurance. I want to invest money. And I always ask them, well, let me ask you this. How much do you have to invest? And the typical person says between $5,000 to $1,000. I said, well, let's think about that. Let's say you have $1,000 to invest, and you leave my office right now and get killed. I'm giving your family a check back for $1,000, versus you taking $100 and getting yourself properly protected, and I'm possibly bringing your family a check for $300,000. Now, what do you think?
That's a strong investment.
What do you think they're going to want?
The $300,000.
See, the thing is, you are doing an investment. It's an investment in your family.
Yes.
Right. Absolutely.
Yes.
Absolutely.
And these parents that comes back and tell me, oh, my kids are grown, that they have their own thing or whatever, and they can do whatever they want to, shame on you. You should want your children to be better than what you have currently at this time.
Absolutely.
I hear that so many times. Often my children on their own, they do whatever they want to. No, we need to insure them, because unfortunately, even though they're young and they're in their 20s, I mean, I'm very fortunate. I've had my children covered all along. So if anything happens to them, that it'll be covered. I don't have to worry about, I have to, as you say, go back to work right away.
That's right.
I hate that.
That's right.
I hate
One
that
of the biggest problem that I had, and I was very fortunate and blessed, was that when my mother passed away, I literally took off a year from work. I mentally checked out out on everything that I love except for my children. But it was more of a routine of me getting up and going and dealing with them every day. But I literally checked out on everything else of importance. If I didn't have income coming in, I wouldn't have been able to do that, to get my time to breathe, to grieve, to understand what is the new adjustments a part of my life. So now I encourage everyone to get life insurance because you just never know what will happen tomorrow.
Absolutely.
It also creates first generational wealth.
Yes.
And we always want to have our family better. What a lot of people don't even know is No Limit, Masterpiece label, was started because of a life insurance policy.
Wow.
Many people don't even know that. His grandfather left him some money in life insurance. He took that money and created No Limit.
Oh, wow.
Yeah.
Wow, that's a blessing to know. So you heard it here first.
Yeah.
Yeah.
Yeah, that is a blessing to know. That is a blessing to know. Explain to me a little bit about the no examination policy.
The no examination policy, pretty much the way it works is we're going to pull your medical records, we're going to pull your driving records, and based on that, we're going to issue you a policy. And that just means, because we have many people who are deathly afraid of needles.
Yes.
And they just don't want to get stuck. So I've actually had a guy come in the office, and I mean, he was perfect weight, perfect height. I told him you can get a great rate on a policy, but he did not want to get his finger stuck. He just did not. Yeah, he did not want to get a needle. So we issued him a term now policy, and it was issued, and we pulled his medical records, we pulled his driving records, and based on that, we issued him a policy.
Oh, wow.
Now it's going to cost you a little bit more, but he was willing to pay it.
So what is the amount of policy that we should have?
What the experts tell us is you should have 8 to 10 times your annual salary in life insurance. So when you look at a life insurance policy, you look at it like this. Okay, let's say I get a $200,000 life insurance policy. You want to look at that as being a payment to your family of $2,000 a month for the next 20 years. Okay. And that's how you want to look at it. So a lot of people say, oh, I got this big policy, I got this big money. No, it's supposed to sustain you for at least the next 10 years. Okay. You should have money. And that's how you should look at it. So 8 to time. So if you're making $50,000 a year, you should have at least a $500,000 policy to be properly protected.
Okay, I want you to repeat that again and tell our audience that again.
If you make at least $50,000 a year, you should have at least a minimum of $500,000 in coverage, which is 10 times your annual salary.
And how long is that supposed to last?
That's going to last your family at least for the next 10 years. That's $5,000 a month for the next 10 years.
Now, is that tax-free or tax-deductible? How is it?
When you get a life insurance policy, that money is tax-free.
It
Okay,
is.
wow. Okay.
It is.
Premiums from a life insurance policy
I
is
don't
tax-free.
want you thinking that the number that Chuck gave is something that you have to, like, it's
Correct.
not in stone. So start somewhere. But I like to sit down with our clients after we've educated them and look at everything. We like to look at their debt, their income, their mortgage, education for the children. And once we tally that up, we'll give them, like, okay, here is what you said, because this is going to be that 8 to 10 times amount, but we'll give you 3 other options as well, something that you can afford, and then if possible, you can work your way towards what you need. But start with something. Don't just say, oh, I can't afford that, so I just won't get nothing. Don't do that.
Okay, so let's say I was 18 years old. Do I wish?
You'll be on your parents' policy. That's what we'll advise you to do.
Okay, okay.
'Cause
But let's
remember,
say
'cause
parents are gone.
Okay, then, yeah, that happens.
Okay. So let's say parents gone, and I know my parents said that I need to have life insurance. And I'm adamant about I want it. And I come to you and I say, okay, I'm 18 years old, I have nothing. But I make about $18,000 to $20,000 a year, roughly. What would you suggest?
I would put you in something that you could afford. Like, realistically, it might be a $15 policy, and that might cover you for $150 because you're 18.
Okay.
So it will be something that you can definitely afford, because you don't want to get in the habit of getting something, then letting it go, getting it something, and then letting it lapse, because you never know when your health might change. And this needs to be as serious as it is today, but that seriousness needs to continue on up, because your family might change. Now you this 18-year-old, now you're 21 or 22. I got married to him when I was 22 years old. So, you know, at that time, because it was always preached in my family to have life insurance, I made sure. And then when he got a motorcycle, I was like, oh, well, let me call this guy up and increase it, because this nut here wants to drive a motorcycle, and I'm not going to be. So It's all in your priorities, and you do have some 18-year-olds that are a lot wiser
Correct.
than other 18-year-olds. But the 18-year-olds typically, because we do one policy per family, would be on their parents' policy until 25.
Okay, so let me ask you the question. If the parent passes away, will the 18-year-old still remain on that policy even though the parent's not there?
Yes, their policy will still be paid up till age 25.
Paid up to
Okay,
25.
okay.
Absolutely.
Okay, so explain to me the what is living benefits?
I'll let you take that one. That's a good one.
Good question. We have a living benefit rider in our policies. It's built in all our policies, and pretty much the way it works is you can get a percentage of your death benefit while you're still alive. So if you become what's called terminally ill, it's called a terminal illness benefit rider, where you become terminally ill, where pretty much the doctor says there's nothing more we can do for you. You have X amount of time on this earth. Well, in our policy, it's built in all our policies where you can get some of the money up front while you're still alive. So a lot of people use it for multiple things. Some use it for that last bucket list trip. I've never been to France. I want to go to France before I die. So they use the money for that. Some have actually used the money to get the care that they could not afford, and it's actually saved their life.
Oh, wow.
So it's a great benefit built in our policies.
So anyone can, well, the person who's on the policy is the one that can use it, correct?
Correct.
Okay, and it covers any type of medical or
When you
expenses?
become terminally ill,
Okay,
and that doctor says you have X amount of time to live,
okay.
when you pretty much
What if,
check it out.
and Lord forbid, we never can tell when God is going to say your time is up. What if your situation changed and you come back to the positive? Like the doctors told you, and this has happened many of times, where you have 3 months to live.
But you end up living for 5 or 10.
Correct.
Right. You
What
don't
is-
have to pay the money back.
don't
Okay,
pay the
that's
money
what I
back.
want to ask.
No, not with our policies. You don't have to pay it back.
The money is not paid back. It was your money.
Okay.
But your death benefit is now deducted from the money that you took.
Oh, okay. So explain that a little bit more.
So in other
That's
words,
okay.
if it was a $500,000 policy, you took $200,000, you now have a $300,000 policy.
Right.
Oh, wow. Okay. Okay. So I'm going to lose some of the benefits that I thought I was going to have.
Well, you didn't actually lose it. You used it.
Oh,
Right.
well, yeah, I did.
didn't
So let's
borrow
think
it.
about it. If you had $1,000 in the bank, you took out $500, you still have $500 left in the bank because you
Okay.
took out the $500.
Okay. Okay. Okay.
And then remember, it's nothing that you're borrowing and have to pay
Right,
back.
it's yours. You do not
Right.
pay it back. It was your money,
Right.
so it's yours.
So what advice will you give our audience in regards to what they should do first?
If you have a policy already, and you feel like it's, and you think it's whole life, a lot of people don't know if their policies are whole life, and you want to get a second look, we would love to evaluate it with you to make sure that you are getting what you're paying for. If you don't have a policy and you always thought about doing policy, there's 3 reasons why people don't have life insurance. 1, they are just too busy, never got around to it. 2, they think it's too expensive. Or 3, they just don't care. And I know that it's not the third one, so it has to be one of the 2. So just make some time, 20, 30 minutes to sit down. What we do is free consultations. We do free F&As, we call those financial needs analysis, where we will analyze everything for you and see where we can make something fit within your budget.
And if you currently have a policy and you want us to look at it, we will do that for no cost whatsoever. We just sit down. Our whole main objective is just to educate people on what they currently have.
That's right.
Okay, so if I don't have a policy and I'm wishing to get started, what are the first steps I need to take?
Well, you need to pick up the phone and contact Kelly, and she will let me know, and we'll sit down and set up an appointment with you. We can either come to you or you can come to our office,
Okay.
but we do home visits.
I want to hear that.
Yes, we do home visits.
Yes.
So we do. We love coming out to the clients because they're more relaxed. All of their personal stuff is there, so they can easily get it if they do have a policy versus getting everything together. Because what I've learned is when someone has a policy, it's not just one policy. They usually have like 5, especially my older people. So now they got to gather all these folders and bring it with them. But if they're home, we can take our time and really go through it. And see what it is that they need. If your policy is good, we have no problem with letting you know that your policy is
problem.
good.
I have another question for you. Let's say your loved one passed away and you didn't know, they have insurance, but you didn't know what company it was with. Is there a site or something or somewhere? How can they find out who the policy is with?
That's a good question. A lot of claims go unpaid because people don't know that they have life insurance with that company. So normally what we do is we give them 2 forms. We say to them, we need you to fill out this form with your emergency contacts and then keep this form and give it to them so that we know who to contact.
Okay.
In the event that you didn't, I wouldn't know how to get in contact. Like for people who think that there was, I wouldn't know where to start because there's so many different insurance companies out there. And I don't know if they put it on a particular site and you just got to put in a social. I don't know.
Okay. The site that you would go to is Unclaimed Georgia. They list all the stuff.
So
Their
everything,
right?
and
So if
investments
you
too,
have
right?
a brooch that was in a bank deposit box and it was tucked away and your loved one's gone, you can go there, type in your name, it will pull up. If you have insurance, if you have a security bond, anything that has been sitting for a while that no one, because remember, a lot of times we go through life and move, just like you said, you just got a new house.
Right.
And the transfer of mail is only good for 6 months.
Yes.
So after the 6 months, whomever had mailing addresses prior to wouldn't know your new address because it's not like the post office or FedEx or UPS even tells them where you're moved to.
Right.
They start sending mail back.
Yes.
So the company starts doing an internal look and see if they can find you and locate you. But then once that is done, that's it. So what they do at the end of the year, writes it off, and then they send it to the Unclaimed Georgia, and then you wouldn't know it's sitting there. But a lot of times that, and I've done it personally a couple of times, I found out that my grandmother used to work for Rich's a long time ago when there was a Rich's.
Yeah, Rich's.
And she actually left a brooch for my mother, and I just happened to went on this site, and it gave me that there was a brooch, so I had to verify that she was her, showing her death certificate and everything else, and then they sent my mom the brooch. I hadn't seen the brooch since I was a little girl.
Wow.
So I still took it today. Then recently I found out that my mother had a policy I didn't know anything about, and I put her name in again, and boom, it popped up.
Wow.
Had no earthly idea, put her name in, sent the information in, and I'm waiting. So I tell everybody, encourage everybody to go to that site. You can, when you get to the site, it asks you what state. So Georgia is not the only state that it also covers. It covers anyone in any state. Now, remind you, you put your name in, there are a plethora of your name. So sometimes you have to click more than one because some will have initials of a middle name. Some will just have first and last. Some will just have the city in which you lived in. They can zone it down to that. So you think about whatever city you had or whatever city you lived in for those years, sometimes it goes by there. But when you are trying to find if you have anything, you can, even if you click on the wrong name and once you send your information in, they'll check and see if that's you and send you a notification, oh, that's not you.
Okay.
So you can go there and get more information.
Oh, wow.
Something else I wanted to also mention is that, Chuck, I wanted you to tell, a lot of women will reach out, but what about our guys?
Can't be dead and jealous. I'd say that for one.
That's what I do tell guys.
Yeah.
A lot of times, and it's sad, and sometimes I have to pretty much just talk to them just like a brother. Because a lot of guys feel that if I get life insurance on me, I pass away, I'm leaving this money to my wife, and she's going to marry somebody else, and they're going to run off with my money. But like Tisha says, you can't be dead and jealous at the same time. And I always tell them, well, if you don't leave her money, she's going to have to find somebody to run off with. So, either you're going to give her the money and take care of your family like you're supposed to, or she's going to need to find herself a sugar daddy. But it all boils down to love. You take care of, you love your family while you're alive. What removes you from that responsibility if you die?
Correct.
If I die, I still have 4 boys. I still have to take care of them. So that's my duty and my job to make sure that I leave money behind, that I was going to do that anyway if I was alive.
So I need all our young men out here to listen and understand
gotta take
exactly
care of
what
that.
Chuck just said. Even though you pass away, you still have an obligation to take care whatever you have left here on this earth, your children, your wife, or whatever. It doesn't stop because you went 6 feet in the ground. It continues. Please understand that that when you pass away, it doesn't end. For prime example, when we leave, and most of us, meaning women, parents, you all go to work, you all start your day, and it's a done deal. We go to work, we come home, we got homework. Mommy do this. It never stops for us. So for us, it continue on, just like when we're living. But when you pass away, we also continues to move forward if something happens to you. Because again, like you said, your income is now gone. So now the burden is on us.
Absolutely.
So now we have to figure out, okay, am I going to get a second job? Am I going to do this? What am I going to do to circumvent this income that's no longer in my household? So again, just like I tell women, I tell men the same, and I'm glad they heard it from you, Chuck, that just because you're in the ground does not mean your responsibility or
Still
your
your children.
liability stops
That's
at that
right.
point.
Still
That's
your
right.
children.
That's
So
right.
yes. Any last words you want to leave to our audience, and also tell them how to get in contact with you?
Just take this very seriously. This is a very serious topic. And like I said, our community, we most of times don't know where to turn. But use the resources that you have, that Kelly is providing for you, so that you can have someone that you can touch and feel, versus logging into someone's computer and trying to pick insurance from a computer screen or 800 number. Let someone actually sit down with you and actually guide you and coach you along the way, because that's the best way to really get insurance, is once you have all of the facts and you really understand what it is that you're purchasing. You want that peace of mind. At the end of the day, we just want peace of mind to know that my family is going to be okay in my absence. Chuck and I, we do this full time, 24/7. This is how we feed our family. So at the end of the day, we love it. We are crusaders. We are advocates for our community. The best way to reach us, Chuck's number, 678-758-0291. The best way to reach me, 404-754-1918. Our office is based out of Lawrenceville, Georgia, downtown Lawrenceville, but we also have agents within our office that are licensed in other states. So even if you're from another state, we can still help you. Don't let that stop you.
Good. So before I leave you today, I want to remind you, don't let dream killers kill your dream.
Absolutely.
Also, take care of you. That's the second thing. Many times we overlook what we need to do because we're doing everyday things such as life. We understand that. We understand that life happens every day, but you still got to make sure that you take care of you take care of the next generation, you take care of your loved ones, and you don't leave that burden on someone else.
Absolutely.
Here, I'm saying again, stop what you're doing, take the time, and go and get some life insurance for your loved ones. At the end of the day, you will thank yourself, and your family will too. Because trust me, I hate seeing GoFundMe accounts on social media. I know it's necessary. However, I would love for us especially to get in line with getting it done today, right now. I want to also end, if you have been listening to this all 1 hour, you heard Chuck mention earlier about how much life insurance you need. He said it twice. In fact, I even hinted by saying, repeat it again and tell our audience. That question needs to be answered. Please give me a call personally, 770-974-9973, to win your gas card. I want to thank everybody for joining Straight Grown Talk. See you again soon. Love you. Bye.
Bye.
That's awesome.